Good morning. This is the DX Today AI Daily Brief for Friday, February 13th, 2026. It is a turbulent day in the markets as the tangible impacts of artificial intelligence on traditional industries begin to materialize, triggering sell-offs in logistics and real estate. Meanwhile, the rivalry between U.S. and Chinese AI development reaches a new flashpoint over data practices. We have a full docket of developments to cover.
A stark demonstration of AI efficiency has sent shockwaves through the trucking sector. Algorithm Holdings reports that its SemiCab AI platform allowed customers to scale freight volumes by 300 to 400% without adding a single headcount. This efficiency gain triggered a massive sell-off, driving the Russell 3000 trucking index down nearly 7%. Analysts suggest this is one of the first clear signals of the productivity shock long predicted by economists, where software capabilities rapidly displace traditional operational requirements.
The commercial property sector is facing a similar reckoning. Shares of CBRE fell nearly 9% today after the CEO warned that artificial intelligence will permanently reduce demand for office space. The logic is straightforward. As AI tools handle more tasks, companies will require fewer human workers and consequently less physical footprint. This earnings call admission marks a significant shift in tone, acknowledging that the post-pandemic return to office narrative is now colliding with the reality of automated workforce augmentation.
OpenAI has leveled serious accusations against Chinese rival DeepSeek. The charge is distillation, effectively using the outputs of OpenAI's advanced U.S. models to train DeepSeek's own systems. OpenAI states that this practice allows competitors to bypass the immense computational costs of training frontier models from scratch. This development escalates the intellectual property conflict between the two superpowers, moving beyond hardware sanctions into the realm of model behavior and data provenance.
The allegations describe a sophisticated extraction method. Reports indicate that DeepSeek utilized third-party routers and programmatic code to mask their access patterns while querying OpenAI servers. By automating these interactions, they allegedly harvested synthetic data to train student models. This technique poses a difficult challenge for AI providers.
Security researchers have flagged a concerted effort to compromise Google's Gemini model. Hackers are actively attempting to exploit vulnerabilities in the system, aiming to bypass safety guardrails. While major breaches have not been confirmed, this activity highlights the expanding attack surface of large language models. As these tools become integrated into enterprise infrastructure, the focus is shifting from simple prompt injection attacks to more complex exploits that could lead to data leakage or unauthorized system control.
While public markets jitter, private valuations remain robust. SoftBank has swung back to profitability, a turnaround largely attributed to the soaring valuation of its stake in OpenAI. This financial result underscores the bifurcation in the current economy. While traditional sectors fear disruption, the entities funding the underlying infrastructure of artificial intelligence are seeing outsized returns. It reaffirms SoftBank's strategy of aggressive capital deployment into the foundational layers of the generative AI ecosystem.
The race to supply the memory chips that power AI training is intensifying. Samsung is now claiming a lead in shipping the latest high-bandwidth memory, or HBM, directly to NVIDIA. This component is critical for AI accelerators, acting as the bottleneck for performance in large-scale model training. By positioning itself ahead of competitors, Samsung is attempting to secure a dominant role in a supply chain that has struggled to keep pace with the insatiable demand from data centers globally.
NVIDIA remains the undisputed center of gravity for this hardware ecosystem. Samsung's aggressive push to supply HBM chips is ultimately a play to serve NVIDIA's architecture. Despite the rise of custom silicon from hyperscalers, the market's reliance on NVIDIA's GPUs for training frontier models continues to dictate the fortunes of the entire semiconductor supply chain. The partnership dynamics between foundry, memory supplier, and chip designer are becoming the defining variables for how fast the industry can scale.
Japanese memory manufacturer Kioxia is seeing its stock performance extend a world-leading run. The surge is driven by the broader need for advanced storage solutions to handle the massive datasets required for AI workloads. Beyond the high-speed memory on GPUs, the infrastructure requires vast, fast storage arrays. Kioxia's performance indicates that investors are now looking beyond the primary processor manufacturers to the peripheral hardware firms that are essential for building out complete AI data centers.
Heat remains a primary barrier to scaling AI compute. GCM Corporation announced today that its VHD thermal management technology has reached the commercial stage. With multiple customers now prototyping, the tech claims to outperform traditional copper and aluminum cooling methods. As GPU clusters grow denser and power consumption spikes, efficient heat dissipation is no longer just an engineering detail, it is an operational necessity. Solutions like this are critical for the next phase of data center buildouts, expected in the latter half of 2026.
The European Union's Comprehensive AI Act has cleared a major hurdle with Germany's final approval. This green light paves the way for the implementation of the world's first extensive legal framework for artificial intelligence. The Act categorizes AI applications based on risk levels, imposing strict compliance requirements on high-risk use cases. For global tech companies, this establishes a new regulatory baseline, potentially forcing them to adapt their development pipelines to meet European standards if they wish to operate in the single market.
The insurance industry is the latest target for vertical-specific automation. FinTech Global has unveiled an AI voice solution tailored specifically for insurance workflows. The technology aims to handle customer interactions and streamline the often cumbersome claims processing systems. While this promises significant efficiency gains for insurers, it raises familiar questions regarding the privacy of sensitive voice data and the nuances of automated decision-making in financial services. It represents the ongoing shift from general-purpose chatbots to highly specialized industry agents.
For DX Today, stay curious.